Welcome to another S&P 500 analysis. Today is November 9, 2022. Well, a post-midterm election, the market was supposed to rally. Unfortunately, it went down. And here's some of the numbers. The Dow Jones Industrial went down over 600 points, 646 points, or 1.95%. The S&P 500 is down 79.5 points, a little bit over 2%. The Nasdaq 100 is down over 260 points, 2.37%, and the Russell 2000 is down 48.5 points, or 2.68%. We're going to take a look at the SPY and also the emini S&P 500 futures, and also some of the internal, and see what to expect next. Stay tuned. Let's start with the S&P 500 and the sentiment chart here. As you can see, the S&P 500 is down a little bit over 79.5 points, just a bit over 2%. Notice that yesterday was kind of building a little bit of a bear flag. So that should not be a surprise if you are looking at this. But of course, a lot of people was basically looking at this to come up and break above that and move up to the 4,000. And the expectation was for the Republican to have a red wave that's kind of moved through and pick up a lot of House seat and also pick up control of the Senate. And right now, both of these houses are toss-up. So we'll see what happens in the coming days. So let's take a look at the VIX here. The VIX is at 25.99, and also the put-call ratio is above 1. Definitely market participants are getting very bearish and buying put, and also much more cautious now. And here we are looking at the up-down volume ratio is minus 10 to 1. 10 to 1 in favor of the down volume, and the advanced decline, the daily advanced decline, 1,946 more declining stock than advancing stock. And the New York Stock Exchange, new high, new low, 167 stock make new 52-week low, 37 make new 52-week high. So the margin is 130 stock in favor of the new 52-week low. Looking at this AD line, the accumulated AD line, we see that there was a little bit of a positive divergence between the S&P 500 a couple of days ago, but also we still have this negative divergence between the AD line here, back here. So right now, this AD line is kind of showing a little bit of a confusion to us. So we just have to be a little bit more cautious, because the tech stock, some of these high cap tech stock is kind of pushing the index maybe a little bit lopsided because of the weighting factor. So we just have to be careful of looking at this particular internals right now. And here is the Nasdaq 100. As you can see, the Nasdaq 100 is down over 260 points. And we see that the up-down volume ratio is almost 6 to 1 in favor of the down volume. And there are 2,413 more declining stock than advancing stock. And the new high, new low in the Nasdaq market, the new low expanded upward now. It's got 507 stock make new 52-week low today, and only 86 make a new 52-week high. So the margin is 421 more 52-week low than 52-week high. And looking at the AD line for the Nasdaq market, we are seeing a little bit of a positive divergence here, and that is mainly due to the Apple breaking down the Amazon, the Facebook, the FANG stock. So it brought the Nasdaq 100 to a new closing low here, but the rest of the Nasdaq market is holding up quite well, and that's the reason why we are seeing more advancing stock than declining stock, but the index is losing more ground than the actual internal is telling us. But all in all, just like the S&P 500, we have to be careful with this AD line for short term right now, and focus on the other internals to show a conclusion on what the market is trying to tell us. Let's start taking a look at the SPY here. As you can see from this daily chart of the SPY, we notice that there is this big red candle here. It is in between this weekly expected move, the range of the weekly expected move, Remember on the weekend video, we talked about the upper range between 390.50 and 387.75, and the lower range is between 364.25 and 362. So right now it's closed at 374.13 today. And let me zoom in and take a look at the 4-hour chart. Now in this 4-hour chart, I'm going to put in some of the zone and also trend line that I put up to keep an eye on for today. These are the zone and the trend line and the level that I was watching. And let me zoom this in here a little bit, expand this a little bit more, and we can see some of the level. So as you can see today, since it's a 4-hour chart, we basically have 2 candles for each day. And it doesn't matter, you want to do it 1 hour, 2 hour. We're basically looking at these level, right? The level that I was watching was essentially this level here, 379.33 area. If it break below that, then we're looking for it to come into the zone here at this 377.63, and then eventually come down to this 374. We have a trend line here that could provide some sort of support there. And you can see that there is this zone here. And this level is right on the edge of this high volume area here. And so is this level here, the 377. We figure a price will attract to those levels, and it could either bounce up and get away from it or just chop around. So you see that the price actually enter into this high volume area and chop all the way down to this 374 at the close, and then dip below, and then we close right near the 374. And it's no surprise that it closed at 374. Right? That's one of the strike that is most likely it's a pin number for today's OPX. So today is Wednesday. We got OPX on the SPY on the SP 500. So what are we going to be keeping an eye on for tomorrow? Well, the first thing is to dip down to this trend line here. So possibly come below this this area here. Let me put the cursor back on so we can take a look at what are the price level. This 372 area, and then the next level to keep an eye on will be somewhere around these pivot high here and the pivot low. So we're essentially looking at this 368, somewhere on this pivot here, this 368 area, and see would it come down. You see it's also in alignment with this edge here. So we want to look at that 368.63 to see would it be able to hold. And if that doesn't hold, we are looking at this composite point of control somewhere near this 366.35. Then we are looking at the lower range of the weekly expected move at 364. Remember, tomorrow we get the CPI reading. So beware, that's a market-driven event, and that could move the market up and down dramatically. We could see a swing all the way down to the lower range, or swing up to the upper range. So be careful. I would suggest wait until the dust settle, and then wait for some sort of established direction from the market, then go and trade that direction. Don't try to front run it or try to jump ahead or try to pick direction without seeing some sort of a trend. Now let's take a look at the emini S&P 500 future. These are the zones that I'm watching, and also a couple trend lines that I put on for today to kind of see where the price might be bouncing around. And this is the edge right here on this low volume 3820. That's one of the level that I was watching, and the other one was 3763 and a half. And basically this edge here, or this zone here. So again, on my you can see that there is this high volume, and these are the two low volume edges around this high volume zone. So you can see prices basically just kind of chopped around there, and it held this supporting trend line. But tomorrow I'm watching for it to break this trend line, come down from this zone and into this possible this low or this composite point of control here, and that would be somewhere around 3704 and also somewhere around 3692. So those are the two downside levels to keep an eye on. Remember, tomorrow CPI come out, we could see a big flush or big rip all the way back up to this 3894, 3900, or we could also come down and possibly even see 3600. Who knows, right? Anything is possible. So be careful tomorrow and just be patient. Don't try to jump in as soon as the CPI come out. Good luck tomorrow, and be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.